Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, November 27th, 2017. Hope everybody had a good holiday weekend and holiday last week for those of you in the States or anybody that celebrates Thanksgiving. And if not, hopefully you enjoyed a little time off with the markets. Had of course, an abbreviated trading session last week on Friday. Half day, we closed the markets at 1. I was out on Friday. I left town for the holidays, and of course, we were closed on Thursday in celebration of Thanksgiving. So short trading week. Let's see if we get the OPEX fade this week. Usually, as I mentioned, when you see that ramp leading up into options expiration, which was last Friday before last week. So therefore, we've only had a few trading sessions since then, and typically that usually sets in within about a week, sometimes a little bit longer. So that's something to watch for this week. Now, what's interesting so far today, I've noted that the Nasdaq 100's trading almost flat, but slightly positive. We have the S&P, as I speak, up about 0.12%. The Nasdaq 100 or QQQ up about 0.08, and the small caps up a decent 0.35%, about a third of a percent. However, what stands out to me, it's quite unusual to see the Nasdaq 100 up with the semis not only down but down this much. So what we're looking at here is a daily chart of SOXX. This is the iShares Philex SOXX Semiconductor Index fund. So an ETF. There's a few of them out there. I like to use this one as well. So I'll watch SMH and XSD. Those are some other semiconductor ETFs. So what we're noting today is, or what I'm noting is the SOX is down over 1%. That's a pretty unusual thing to see, especially again with the Qs up. And not only that, but if we take a look here, this is the components. This is my related items list. It populates all the components of that ETF. And as you can see here, this column right here is a percent change. Only one out of 31 components in there are trading green. That's AMD, Advanced Micro Devices, which, as most of you know, has been one of the weaker semis. That one peaked way back here earlier in the year and is well off its highs. But with that being said, there's a broad-based sell-off here so far today. Profit taking, whatever. One day doesn't make a trend, but this is something, again, it stands out to me because I'm seeing a lot of these under some pretty heavy selling pressure. You can see here the percentage gains and losses. So let's go back to SOXX, and then I'll just look at a few of the charts of some of the individual leading semiconductors, give you guys some levels to watch. In a nutshell, what stands out to me, of course, we've been in just a phenomenal, very resilient uptrend for the last couple of years. It's about a 2 year. You can see going back to really February of 2016, well-defined uptrend. The SOX walking its way up within this price channel. By price channel, I'm referring to the two white lines that shows you the channel. And then, as I'll often do with a price channel, I'll put a midpoint line in there. And you can see that prices tend to either trade above the midpoint of the channel, or right here you can see they broke down below. And that channel, that midpoint line, will often act as resistance when tested from below, like it did here. Fell back to the bottom of the channel, and it will often act as support when tested from above. So right now prices are at the top part of the channel, but some of the things that I'm noting here are the recent extreme overbought condition. We haven't been this overbought in many years, maybe going back to the dot-com boom in the semis. I'm not sure when, but we hit RSI readings. I put a purple line here. The red line at 70 is usually oversold. I'm sorry, overbought. Now, it's not unusual. The semis are a hot sector, meaning when they move, they really move, whether it's to the downside or the upside. And that's why I'm doing this video, and that's why I'm sticking on these semis. There is going to be another lucrative shorting op coming up here probably very soon. Right now, you can see we were overbought, not as overbought, but very overbought. I put a purple line right around the 80 level, and that was an extreme overbought reading right here. That reading was followed by a 11.3% drop from when that reading was hit. And you can see the sell-off started out with a bang. Look at that big candle. It denied exit of an objective exit for a lot of those momentum traders who were long. They got caught off guard that day and never got a chance to get back out anywhere near where they were. And it also denied a lot of shorts an objective entry You could have still shorted there. I shouldn't say it denied you an objective entry, but it fell pretty quick. So if you waited, you missed, a big, the drop from the highs was, well, where we closed that day down about 5%. So either way, you can see big red bang there, the big red candle, followed by some sideways consolidation and then another leg down. And that's probably what you're going to get here. There's a lot of hot air in these semis. When they break, uh, you're going to see a rush for the exits, a lot of profit taking, a lot of shorts that want to get in and game the next pullback. Logical targets, just looking at this right now, would be the bottom of that price channel. We're so close to the midpoint of the channel. I think when this dam breaks, we'll probably come on down and at least visit there. And again, I'm not right now. I don't have price targets on SOXX. Other than that, just want to point out these developments. The other thing to note. Again, we had a very recent extreme extreme overbought reading. In fact, were even more overbought than we were back here when we hit roughly 80. I think this was about 82, 83 on the RSI. So an extreme overbought reading. And unlike last time, for the first time in a while, we have negative divergence on the daily time frame. You can see the divergences marked here. Prices thrusting up from this point to this point, making a higher high. So negative divergence on the daily chart. We haven't had that in quite a while on the semis, so let's see what happens there. 60-minute chart, if you want to hone down any entries, you can see this is a longer term trend line here. In fact, I'd have to jump back a little farther on this chart. You can see that trend line coming off the August lows there in the semis and comes through here. And at this point, we have a fairly well-defined trend line. There's only 3 reactions so far, 1, 2, 3, but it's worth watching. And that forms this rising wedge pattern right here. You can see the negative divergence down below. So if you're wondering, where, okay, it's been a very tough trade on the short side for the semis. It's been a buy and hold trade for longs, but shorts have had a tough time. Myself had a tough time with these this year, caught a few, but I was stopped out on more of these trades than I can recall in a long time over the last year because we've had a lot of false, whipsaw signals where we broke down and then the uptrend continued. However, there it is. We have a support right there, about 179.50. That's minor support, nothing serious, but right below that is the trend line as well. So I think it's safe to say if that trend line goes, we're coming back down to at least that 173.55 level right here. And that's from where we're at now, about 3% lower. And then if and when that goes, and again, the divergence in there shows that it will probably happen soon. I would look for the support here on this trend line. Now, trend line's dynamic, meaning it changes every day. Every day that comes in higher and higher. But from where we're at today, if we get down there, this is just using the measuring tool and trying to guess about 6% drop from where we're at today. And again, if we look at the daily chart, if we come down to this price channel here, let's try to grab that. I'll have to come alongside it there. It would be, yeah, roughly 9% down to that price channel on the daily chart. Okay, and to wrap this video, to keep it relatively short, let's just look at some of the leading semis. I'll just go through this in order of market cap. You can see here by descending order of market cap. Intel has leapfrogged, taken back the title as the largest semi over TSM, Taiwan Semi. You can see now Intel is a $210 billion company after this big rally. So let's just look at some of these top names and we'll wrap it up there. And again, these could be both trade setups if you want to go with individual semis, but it also helps to confirm or refute any short trade on the sector itself. If you're using that SOXX or any of the other semi ETFs, you want to see these leaders crack. So we have as you can see here, a very well-defined uptrend line on Intel. We had a big gap up recently, and that was an earnings-induced gap, if I recall. And the stock peaked out, you can see, around the beginning of November, and has been in a steady downtrend since, giving up, those gains each and every day. That we still have the gap yet to be tested or even backfilled. We haven't even come back to the top of the gap. So here's what I'd look for on Intel. Keep it simple. Break of this uptrend line, number one. That would be a near-term sell signal or bearish, but then you have that gap there. Watch what happens there. Maybe a little bounce off the top of the gap, but ultimately I'd look for at least a backfill on Intel. And to give you an idea, and this would also play into the SOXX trade. There it is. It's about a 6% drop. That's right about where I told you my target on that 60-minute chart would be. So that's not coincidence. I can almost assure you that uh, well, I can't assure you both will be hit. I think they will. And if they do, they'll probably be hit around the same time where you'll see that trend line, that uptrend line on the SOXX 60-minute chart get hit right around the time Intel backfills this gap. So that's that. TSN, Taiwan Semi, there it is. You can see, divergence. I haven't measured this one out. This shows you here there was a 10% correction there. I can try to show you what this drop was from the highs. Let's see, there was the divergent high. That was about a 6.5, almost 7% drop there, right here. So you can see these divergences do play out. You just have to wait for them, and you also have to align them with, if you can, a break of support. So in each case, you had a bearish rising wedge, and that's defined by an uptrend line, broke down, and you can see in this case it broke down and back tested. So where are we at now? Looking at this chart, we had a divergent high back here, 10% correction, divergent high here, an almost 7% correction. And now for the first time in a while on Taiwan Semi, we have a divergent high. You can see the negative divergence there clearly. Big gap down today, stock's down 3.58%. I don't have a trend line drawn, and I'd really have to force one here. I don't see a clear uptrend. You could do something along these lines, just somewhat of an uptrend, breakdown, little kickback rally. And I think this one at bare minimum is going down to revisit that primary uptrend line. You can see there that yellow uptrend line. So that'd be about a 4.5% drop if we got there soon. NVIDIA has just been a monster as well. No, with the GPUs, the graphics processing cards that are being used to mine Bitcoin and other cyber currencies. Not much to say other than there is a very well-defined uptrend line. You can see it here. And this is a large rising wedge. We had an island cluster top there, never panned out. This was one of those short trades that didn't pan out, so looked like a good one. But either way, you can see here, nice, well-defined uptrend line, and we're dancing on it now. Basically, NVIDIA doesn't have any more room. If it goes down another percent or so here, you can replicate this trend line on your chart. That's going to be a powerful sell signal. Look at this divergence here. Now, whether we kick back, move down a little, back test it, whether it proves to be one more false breakdown in what seems to be a never-ending rally, all I know is this is technical analysis. Sooner or later, these overbought conditions, these negative divergences, these extreme valuations, they play out. And even if you're not looking for the top, just to game a pullback or a swing trade on this one, if it breaks that line, I think we'd come back down to, at this point, if I had to give you a target, and this is just doing this offhand here, about 174. We're at 215 right now. So I'm looking for a drop is about 20% or so in NVIDIA once that trend line goes. And again, I'm doing this video because it looks primed to go at any day now. But you want to see all these break down together. That's why I go over these top components. You don't want to see just one breakdown. But if you see Intel, Taiwan Semi, NVIDIA, Broadcom here, all go and take out their trend line support levels. Let's see, there's not the best defined, but there's a trend line you can look at. Either way, there's a divergent high. Last time we had a divergent high was back here, and the stock did fall from there. It fell quite a bit, 13% or so from the highs. So you can just look at the history, these divergent highs, corrections, divergent highs, corrections. We haven't had a divergent high in quite a while in Broadcom. We have one now on the daily time frame, that is. Qualcomm, this one was one of the few that I really like back here. We had a downtrend line. We traded it long earlier in the year. Then this downtrend line, big divergent low. You can see it here with the yellow. See, this one, was in a bear market while the rest of the sector was going up. And it finally played a pretty powerful game of catch up once it took out this downtrend line after putting in that divergent low, broke out, back tested, and boom, off to the races. Obviously, it has resistance up here around these previous reaction highs, not too far from it. So very little upside left in this one before a decent pullback. And, if you're long that one, what I would expect if the sector rolls over soon, and again, I think that sector is poised for break down any minute now, any day now. But if this one happens to power up a little bit more, around 70, 71, that's about all of the upside I see before a decent pullback, and a decent pullback would take us to this line here. That's a well-defined support level right there, and that's about 64. So TXN, Texas Instruments. I'll wrap it up here. You can see the story is the same. Other than Qualcomm, which was, beat down, and I'm talking about the top components, already had its bear market, already had a heck of a correction, and was primed with a very, bullish chart, a reversal pattern like I just showed you. The rest of these are, at, all-time or multi-year highs, very stretched. And the common theme here is you have this negative divergence on the daily time frame. The last time that I can see negative divergence on Texas Instruments was back here at this point. You can see the divergent high marked right here. We had a little one there. We traded sideways, and that just extended that divergence. That doesn't mean this one didn't play out. It just meant the divergences were never burned through. We continued to diverge up to this point right here. And I can show you how much that fell. Might not look like much on this chart because the move has been so big, but that's an 11% drop. So, if we get look at this, we have a steep rally. This came after a period of consolidation that helped work off those overbought conditions. You can see by the time the correction set in, the divergence was confirmed right here. We weren't as overbought. Right now, we're coming off extreme overbought levels. So, overbought can become more overbought. Anything's possible. Maybe there's a little more upside left. There's a lot of possibilities in the chart. I can't go over all of them, but you can see here there's room to put in, let's say, divergence at this point and then come down. I can certainly see that. So that would look something like this: a breakdown here, a kickback rally to back test the trend line or the wedge from below, while putting in the divergence in maybe a few weeks. That's certainly a possibility, and then a correction setting in. So we'll stop here. Again, the important thing is, even for a short-term swing trade or possibly a longer-term swing trade, is to replicate these charts, at least the top 5 holdings in the sector, as well as the ETFs. And again, you can use XSD, SMH. I don't have all these charts marked up right now. There's the trend lines a little bit. Need to tweak it a little bit there. And then SOXX, which I started with. And once you see all those trend lines go, there's a high probability that the sector is going to have a correction there at that point. Again, I'm talking about the ETFs as well as the top, let's say, at least the top 5 holdings. All right, this has been Randy Finney with the right side of the chart. Hope you enjoyed it.